Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Is Alphabet now one of the cheapest stocks on the market? I think the case can be made that it is. Remember, this is a company that a lot of investors thought was under threat from artificial intelligence just a few months ago. But I think that concern has really waned, and we're kind of back into the case where Alphabet's strengths are really coming to the forefront. So I want to dig into exactly what this company is trading for and why I like the valuation right now. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing. I got a link to that in the show notes if you're interested in high potential stocks. I want to start with a chart that shows Alphabet's price to earnings ratio and price to free cash flow. You can see that price to earnings about 27 right now. That's not cheap. You wouldn't call that a value stock, but for a tech company that is churning out a lot of cash, I think that's a really reasonable price to pay. You can see that late in 2022, the valuation dipped under 18 for a period of time. So it has been even cheaper in the recent past. But this is also a company that has performed extremely well from operations. Over the past 5 years, revenue is up 120%, net income is up 212%. And this is a company that just keeps getting stronger and stronger. The network effects for businesses like search, platforms like YouTube, where you're watching this, they just get better as the company gets bigger, as there's more people putting content on those platforms, and then there's more viewers as well. That's why the economics of Alphabet's business are so strong. And you can also see that Alphabet is starting to buy back shares at a pretty rapid clip. This is the kind of thing that helped Apple become a much more valuable company. They started returning that cash to shareholders in both dividends and share buybacks. Now, Google isn't paying a dividend yet, but you can see that over 1 billion shares were repurchased since 2018. So that's a pretty rapid clip of buybacks. If that continues with the cash that keeps being churned out of this business, I think the stock could continue moving higher. From a threat standpoint, I wanted to show this chart of the interest in ChatGPT by people searching on Google. So this is Google Trends data, and you can see that in November, early December, that was really when ChatGPT took off. That momentum continued throughout most of the first quarter, peaking right here in that mid-April timeframe. And what's happened since then? Searches have just dropped off a cliff. This is relative search terms, so we can approximate that searches for ChatGPT are down about 50%, maybe even over 50%, just between mid to late April and early July. That's a really significant drop in the amount of people who are searching for ChatGPT. And I think shows that there was quite a bit of bubble going on right here, a bubble at least in interest. This is data from StatCounter, and you can see the same thing is going on with search. Last year, 91, 92% market share for Google. What is that standing at right now? 93%. So the data is telling us that people are still searching with Google. They're not moving over to a platform like Bing. That's the one that might actually be taking market share if something like ChatGPT, which is now the GPT-4, is integrated into Bing. So if that was something that customers were moving over to, we would see that both here in this data and then also in the search terms. That's just simply not what we're seeing. As a result, I think the competitive threat that artificial intelligence poses to Alphabet as a company probably isn't as high as we might have thought just a few months ago. It seemed a few months ago that we were going to stop searching with Google search and we were going to start just asking artificial intelligence for things. But that's not really the way that things have played out. AI is not good at replacing search in a lot of ways. And so I think this gives time for Alphabet to really catch up in artificial intelligence and what the use cases, what those products and business models are going to be, and then integrate them over time into the search engine. Now, this is something the company has been doing for a very long time. So it's not a new challenge for Alphabet. It's just something that the market kind of ebbs and flows on. And right now, I think Alphabet is a much stronger company than a lot of investors are giving it credit for. There's not nearly as much of a threat from upstarts in artificial intelligence as we would have thought a few months ago. And that's why I'm much more bullish on the stock today, because we basically see the power that Alphabet has as a company. But what do you think? Is this a great time to buy Alphabet and all of the businesses that come along with it? Let me know your thoughts in the comment section Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.